That the year has ended here in 2025, we have the new fresh data that came out here to talk about what happened in the real estate market here in the Aurora, Illinois area. Aurora, Illinois is a suburb of Chicago. It is literally the second largest city in the whole state of Illinois, and so it's important to see what is going on here in the real estate world, especially if you're looking to buy a property sometime here in 2026. It's good to see what the market trends are going to be by looking at the past, right? Looking at not just what happened in the last month, but also what happened in the whole year, and even giving a context of what happened in the last 3 to 5 years. So that's why it's important to look at this. Now here, what you'll see here in my mouse pointer is we're gonna focus on a specific market. Mind you, once again, there's many markets when it comes to the real estate world, right? There are the single family detached homes. That's a market. There's a certain buyer looking for that particular property. There's single family attached. Then there's single family flips, single family rents. And then there are those properties that are attached, such as townhomes, condominiums. That's a different market altogether. And then there's also the lots, either residential lots, commercial lots, industrial lots, all sorts of properties, right? So the point is that because there's different properties, different markets, reach out to me if you are interested in knowing what the particular market you're interested in. I could give you a report just like this with my opinion, my analysis, and we can look at the charts and graphs to give you a better idea and make a better informed decision when you're moving forward, okay? See me, Luis Torres, as your resource when it comes to real estate here in the Chicagoland area. All right, so the market that we're gonna zero in on and zoom on, focus on, is a single family detached homes. As you can see here in the criteria that I have here, a rookie mistake would be to just put all of them bundled up together, and you're trying to consult with somebody that's a single family detached only, right, in a certain price range. Well, here, let me show you that in the price range that we're looking for here are going to be a market of $300,000 or less. Again, it doesn't mean that that's my only market. If you're looking for something higher, like in the 700s or $1 million mark, you can also reach out to me about this, okay? So for now, we're going to look at that market that's $300,000 or less, single family, detached, okay? I'm sorry, attached. Let's go ahead and look at the detached. Look at this. The numbers are going to change now that we do this. And I'm going to remove that one. So that's detached. That's a single property that is not hooked up and connected, with other properties. It's also a resale. It's not a new construction situation. It's not a real estate sale. It's a traditional sale, right? That's the kind of market that we're looking at. Now, yes, there are real estate owned. There are short sales here and there. But again, just looking at the traditional sale, okay? And all sorts of sizes, okay? So again, that's what we have so far. Now, in the time of this recording, it's already January. It's already 2026. But the numbers for last year are barely coming in here, right? So December, it's in the books, and let's go ahead and start dissecting the data. 3 main pillars is what I'm going to look at, okay? 3 main things I'm going to look at, and let me see if I can show you. I'm going to look at the sales price, number 1, the pricing of homes. Number 2, we're going to look at the inventory or the supply of homes. That's another great pillar that shows you how the health, the status of the market is currently. And number 3, buyer demand. See how the buyer demand is looking like. Are we seeing cycles? Are the cycles normal? Are they healthy, right? We're going to look at those 3 pillars and then, wrap it up in the video with some overall general analysis, okay? So try to keep this video as brief as possible. So let's go ahead and take a look at sales price. First of all, the average. Why average? Just because we want to just take a look at the zoomed out view of all the homes in the area and what they sold for. So according to this, in December, the last month, we had an average sale price of $534,000. Now let me go ahead and just put it one more time there. All right, let's fix that number, right? Rewind 5 seconds. All right, the average sale price in this particular market, right, was 250-ish, around there, okay? That's the average. All right, let me go ahead and show you that's the rolling 12 months. That basically takes into account the data of December and basically blends it in with the previous 11 months, okay? So it is 12 months of activity, but let me actually make it more specific and just point out that monthly raw data, okay? So here you're seeing the whole 3 years, right? Just to give you context of the trajectory of where it's going. But again, the average price of homes in December in this particular market, $754,000. Okay. Now, is that higher or lower than a year before? It says here 1.1% higher. It's relatively flat still. If you look at December 2024's data, 238,000 was the average. So 238 and 240, basically the same, right? So nothing huge has gone on, but at least, hey, prices have gone up year over year, at least when it comes to this. Now that's the average. Now that sometimes can account for an anomaly. Sometimes there are prices that are so low and some that are so high. So let's take a look at the median, which is more of a conservative number. Again, $245,000 is the median price. If you look into that a year ago, prices were at 250. So 250 versus 245. Yes, the price did go down here to 2% when it comes to the prices of homes. So overall, right, the prices of homes are still staying flat. I did speak with somebody today who is looking to see if the prices of homes are going up or down, or they're anticipating a crash, and they're saying no, I'm going to wait for a crash to occur. And that basically, would entail that there's a huge, drop in buyer demand, and something drastic happens that, buyers are no longer looking, and therefore the prices of homes have to come crashing down, right? And since we'll see this as well here later in this video, buyer demand is still strong. That's what's going to keep those prices afloat or even exceeding. So anyway, the prices of homes relatively flat for this year. Okay, kind of let me blend in these numbers and show you where the trajectory has been. Let me kind of zoom out now to the 5-year mark, okay, and see where prices are. So it looks like since, basically the whole year, it's been plateaued at $255,000. I mean, the whole year in this particular market, okay? It doesn't mean that homes are not selling for above that. Again, it's just a conservative, safe number. Okay, so that's what we see here when it comes to these homes. Now, we did see in 2023 a price hike, you could say. Prices of homes did go up from 240 to 255, so that was a nice jump in those 2 years, but it looks like that price has now flattened. You say, well, there you go, it's going to go down. Well, again, it's repeating itself, it looks like, because in 2022 September we did also see a plateau, and someone would have thought, okay, now it's going to go down, but according to the data, hey, the prices continued to go up. So anyway, that's what prices are. They're still staying steady, they're staying firm, and that's where we are. Okay, next step, number 2, let's look at the inventory of homes. Not just how many homes for sale, right, but the month's supply. And that's really what I care about more than anything. But let's go ahead and look at homes for sale here in this particular market of $300,000 homes that are detached, disconnected, and see. As you can see already here, there has been a huge slide down of inventory, and that's just a drastic move from the time of April 2020. We know what happened in 2020. Inventory has just plummeted, drastically. If you look at the last 10 years of data, you'll be able to see again that prior to 2020, what has been happening in a normal market. Look at this, the up and down, up and down. But in 2019, we did have 450, 410 homes for sale, and it was hovering around 360, 400 or so for quite some time, a couple of years. All right, and then there was another huge time around 2015 where the homes available for sale was at almost 700 or so. Okay, so ever since then, just inventory has been plummeting, and now we're at real low levels. If this was a Boeing 747 airplane, you would think, man, this thing's about to crash. It's so low to the ground, right? And that's just where inventory is at right now, very, very low levels. Now, let me take a look at another metric when it comes to inventory supply, and that's the month supply. Now, typically in a balanced market, that is a buyer's market, seller market, like there's just complete balance, the mark, or the watermark you could say, would be 6 months supply. So anything above 6 months supply will be considered a buyer's market, and anything under 6 months would be considered a seller's market. As of late, seller's market is just the norm. That's just the way it is. I don't remember the last time there was the feeling of a buyer's market, unless a property itself isolated on its own, an anomaly, right, is maybe harder to sell. Then in that case, those sellers might do a little extra to get the word out there and get the buyers motivated. But by and large, because of the market itself, we're still at a seller's market, very much so. As you can see here where my mouse is, that's 4-month mark. So we're already below the watermark, you could say, of the balanced market. We're below that. So in other words, we're in a seller's market. And now, I guess the question is, how much of a seller's market? Is it weak sellers market? Is it a medium, or is it a strong sellers market? And I mean, just looking at this, because we're very close to zero, I would say a very strong sellers market. And that's what's been continuing on even in the last month or so here. Okay, so this is just 10 years. As you can see here, that's what's been going on. Let me give you the raw data points here, and you can see again the month supply of inventory. It went up in October. There was a peak, and then obviously we are seeing a low. So let's kind of take a look. Is inventory going to make its way up? I mean, what's happening here, right? So I anticipate, because of the political climate and the controversy going on with immigration and whatnot, that I think other folks are going to want to start to sell, because I've seen that in the market. Some folks are wanting to just wrap things up here, unload their properties and move on. So I do anticipate that jump to occur. And as far as interest rates go, the lower they go, the more buyers are going to enter into the market. And obviously, like I said, the more buyers that exist, the more they're going to continue to keep the prices of homes floating at a certain level. Okay, so let me go ahead and take a look here at a year ago. Using the data here, it says that let me look at the month supply, 14% higher, right? So let's just look at December 2024. In December 2024, the month's supply was at, find it right here, there it is, 0.7. 0.7 versus 0.8 is basically the same as far as that goes, right? Now, when do we see a drop in inventory, and when do we see a spike in inventory levels here in the market of the Aurora market right here, okay? So let me go ahead and zoom in and kind of take into account the last 5 years. And so what we have here is there's a low point, usually around January, February. We see the points going low here. And then let's take a look in 2022, again, in the winter time, right? January, February, cold weather months. That also plays into the inventory supply. Again, February 2023, and in 2024, we did see that there are homes going down as far as the inventory goes. So January, February, March, we historically see low numbers of inventory, okay? And that's just the way it is. Now, in my area, I have seen a little bit of a spike going on here. I've seen, at least in my driving the neighborhoods, more for sale signs. But according to the data here, it looks like the low numbers are happening in the cold weather months. Okay, now the highs, right, the peaks are usually in the summertime, right? That's because the buyers, right, are mostly absent. If you were to take the buyers, activity or shows per listing and blend it in with the month supply, show them both side by side or, crossing each other, you probably see the spike. Like if you can see my mouse right here, the spike going down would be around August, right, of buyers, and the spike going up of buyers would be February, right? It's like a crisscross, tit for tat, yin yang type of thing, where if inventory goes up, it's because sellers are down, if that makes sense. Inventory is down, right? And if buyers are down, that means inventory's up. So guess what? Because we're in a cold weather month right now, January, February, because inventory is low, that means that buyers are up. Is that the case? Well, let's go ahead and segue to the third point and the third pillar of the market, and that is going to be, yes, look, we're going to see here that buyers are going up. Let's take a look. Peak and valleys, right? So the peak of buyers is going to be, let's see here. Look, historically, let's go back to December 2021 into January. You see that? December, and then boom, we see more buyers entering the market, and it peaks in March. Okay, so now let's go to the next year. December, low amount of buyers. Remember, we're looking at buyers now, or shows per listing, and that means that these are pre-approved buyers already, right? Already working with a realtor and already registering to go see a house, right? That's what metric we're using here. We can't measure, now we could, right, look at Zillow and see what interest, but there's always interest of buyers, right, looking to buy, but they're not probably qualified. So they don't really register in this metric. But those that are here, yeah, you'll see them. So in December, we have a low amount in 2022, and then spike up, right? See that? And it goes up, up, up. In January, February, we see a spike, and then it continues to go on. Okay, let's look in 2023. Again, November is a low, and then we had an early peak, or early rising. You could say December started to go up, and then boom, a spike up. And so we do see in February, March, more buyers. Even January, they're starting to build up once again. And I do want to say that that's around the time that the income taxes are coming out, and I think that's when people do have extra funds to go ahead and make something happen, okay? Okay, so December 2024, a year ago, right? Again, a low point and then immediately spikes right back up. So the cycle that we are seeing here is that yes, buyer demand is going up, and that's what we're going to see here. Okay, so that's what we're looking at here. And we did see a dip actually for the first time in about 3 years, a low point when it comes to buyers, right? And even right now, buyers are, it looks like 9.2, 9.3. So there's a little bit less buyers in the market as they were before. A year ago, let me just take a look at last year. It was 11.3, and now we're at 9.3, right? So we have two less buyers. So if you want to put that into perspective, it's basically instead of having 11 shows per listing, right? Now there's just 9 shows per listing, okay? So a little bit less buyers out there. But the good news is that there is, you know, a upward trajectory from November to December, a little bit of a spike going up. So now that we're in January, February, I do anticipate more buyers to enter the market. That's usually the time that we spike. So I anticipate it's gonna go up like this, and yeah, all the way to through March, and even hanging around through April. And that's when I do see buyers start going down in the month of May. When it starts getting warmer, but there's still a lot of activity. So even though it's January, even though it's cold and sometimes it's snowing, right? Even though it's raining today outside, you know what? I do anticipate there to be a spike and a lot of activity in real estate. Okay, so now that the holidays are over, people are starting to get active once again. And so yeah, just wanted to give you that quick update. In general, again, prices of homes are staying steady in this market, right? Inventory levels are still very low, and buyers have dropped off a little bit. But right now in January, February, March is the time that buyers start entering the market in droves, you could say. Okay, so and if the political climate is such that there's more inventory getting into the market for the political reasons that, as I already stated, then you know what, we will see prices kind of even out, because again, less inventory drives up the prices, because again, there's buyers fighting for these homes, thus making those off-market properties even more valuable, and those realtors that bring you those off-market properties even more indispensable. And i.e., I'm one of those, right? So reach out to me, 630-777-4597 if you're interested, and I would love to have the conversation with you about the real estate market. Until then, thanks a lot for watching this video. Don't forget to like and subscribe, and yeah, let's have a conversation about any listings or any properties that you're interested in. Again, it's Luis Torres here as a realtor with On Path Realty. Take care. Have yourself a wonderful month.